Hello traders, welcome to the video. So in this video I'll be showing you how you can cash spikes easily in the boom and crash market and how you can use it to make a lot of money out of the market. So this strategy I'm about to show you is one of the easiest way you can actually use to make money in the boom and crash market, and it do not require any indicator for your analysis. You just need to be smart and listen to everything I say in this video. You can see on my chart I am on the 1 minute time frame, and this is boom 1000. So I will show you some example on the boom market and then some example on the crash market. So which tools are we using for this strategy? We are using our rectangle tool and we are using the fib tool. So how do you get this tool? First thing you do is to click on this shape icon over here, click on this add button. So if you click on that, you scroll down, you pick your Fibonacci retracement. This is the fib tool. So if you draw it, so on my fib tool, as you can see, I have the level 10, level 61.8, level 50, and level 0. The second tool we'll be using is our rectangle tool. So to select that, click on this plus also. So scroll down, this is your rectangle tool. Then draw this. So these are the two tools that we'll be using for this strategy. Don't worry, at the end of this video I will show you how you can set up your fib so that it can look exactly like my own, because if you first open it, it will not look like mine. So first thing we want to know is we want to know when the bull market is in an uptrend and when the crash market is in a downtrend. So how do you know when a bull market is in an uptrend? So you want to look for two specific patterns when trading this strategy. The first one is like this, breaking this. So this will be a spike to the upside in the bull market, while the second one is like this, breaking this. This will be a spike also in the bull market. You can draw that shape out by pausing the video, and then for the crash market you want to see something like this. This will be the spike breaking this low, or something like this, and this will be the spike breaking this low. So once we see this shape, what are we anticipating? We are anticipating that market will come like this, then continues to go to the upside until we see it change structure also like this. So similar thing is happening at this point. If you look carefully, come this way, then break this to the upside. This is exactly the pattern that I just showed you. So what we anticipate is that it will come down, continues to break to the upside. So how do we use this to our advantage? So once we have market create this pattern that you see over here, break to the upside, so we anticipate that the next one will also break this high to the upside. So one thing we do is to pick our fib tool and draw from this level to this level. That is if this spike have not printed at all. So we take our rectangle tool by clicking on this shape again, draw it between the 50 level and the 61.8 level. Hope you understand what I'm saying. So this area will be our area of interest. So if we want to enter the trade, our entry over here, our stop loss will be below here, and then we target when market breaks out of the zero. So once you see market breaks out of the zero high here, then we close our trade. So we see that markets have broken structure to the upside again. So then we anticipate that market will still continue to go in an uptrend. So we take our fib again and measure from this low to this high. Then we put our entry at this 50 level. Then our stop loss will be below the 100 level, because we know that once market goes below the 100 level, it is likely to continue to go in a downtrend. So we put our entry at the 50 level, stop loss below the 100 level, and then we target when market breaks out of the zero level. So you see over here, the breaking occurs at this spike to the upside. This is where the breaking of structure happens again, and market continues to rally to the upside until we see another break of structure at this point. So once we have that, we take our fib tool again and measure from this last spike to this spike, and then take our 50 level. We see that immediately market enters into that zone, it spikes out and breaks structure to the upside. Hope you understand what I am saying. So now let me go to the crash market and show you some examples over there. So this is the crash market. Like I said, the first thing you look for is pattern like this or pattern like this is the first thing you look for. And if you look carefully, we have this pattern over here. You see it, then breaks this low. So once we have that, what will we do? We take our fib 2, we measure from this high to this level. We see that market did not come to the 50 level before we see the spike to the upside again. So what do? We take the last structure that break the low over here to this point, because this is the last spike that breaks this low. Then we take a triangle and put it at the 50 level. We see once market enters into the 50 level, we see spike to the downside. So once we have that, we take our next level again. So this is one of the best way you can actually trade the boom and crash market. I do this also. This one has a very nice win rate because you are catching spike. So you see right here, you mark this level again. So once you have that, you wait patiently, then you see spike to the downside that take out this low. Then once we have that, we take our fib 2 again, then we put it at the next level that breaks to the downside. So we put it this way at this level. So enters into the 50 level, then you see spike to the downside. So after that, this is the spike that broke structure, but market did not come back to retest it. So before you see deep down, then we take our fib again and mark out this zone. So the market did not come back to the 50 level. Then immediately you see market goes above the last spike, then you know that market is likely to change trend to the upside. As you can see, spike to the downside, then change trend to the upside. Hope you understand what I am saying. That is how you trade it. I want you to pay attention to what I say because you will definitely see an example on your chart, but here it has not happened in a couple of days, so I will give you the illustration of what I meant. So this is example of what I want to show you. I know it's not clear enough, but I want you to pay attention to what I say. So if you have a spike to the downside that broke structure, for example, and you take your fib 2, you draw your fib 2 from this point to this point, then you see a spike to the downside, another spike to the downside. Once you see market create up candle that goes above the first spike, you should close your trade because market is likely to continue to go to the upside. So there is no need for you to hold your trade until it takes you out. Just close your trade manually at this point. So sometimes you may see market come to this point and still spike to the downside. Consider that a loose trade and focus on another entry. So this strategy that I show you works on the 1000, on the 500, 900, 600. It also works on the 300, but it is not as cleared as the 1000 market. That you can go back on your chart, backtest this strategy and see how it works. But I find it more profitable with the 1000. That is why I stick to the 1000 market. Two, and make sure that you trade it with your demo accounts in the live moving market. That is very important so that you compare your win rate. So if you find it very profitable for you, you can stick to this strategy. This strategy is simple and very easy to trade. You just need to follow the rules that I have given. So if you find this video helpful, don't forget to like this video, subscribe to this YouTube channel, turn on notification bell so that you get notified anytime I release a new video. You can also check out my other videos that are displaying right now on your screen. Thanks for watching.